Let's continue that with Julia Borston at the All In Summit in Los Angeles with a very special guest. Hey, JB.
Hey, that's right. I'm joined now by Bill Gurley, legendary investor at Benchmark for many years. Now you sit on 9 boards and have some great perspective on what Dee was just talking about. Not only were you instrumental in Uber's early days in launch, but you still own Uber shares. Yep. And we were just talking about Uber vis-a-vis Instacart. What is your perspective on the Instacart IPO and the valuation that has really come down?
Well, the first thing that I would say is when I read the S1, I was actually very positively blown away by the profitability and how quick they got there. Keep in mind, we came out of a time in the venture industry where growth at all cost was the model everyone was told to run. So everyone's got the gas pedal fully to the floor. Making that kind of cultural transition to profitability is very, very hard. There's another element of the Instacart situation that I don't think people are talking about. Their stock-based comp is a fraction of all the other companies in the space and all the other tech companies. And, you know, a lot of companies are running SBC very, very high, and it's very dilutive to shareholders. And so I'd love to see more discussion about that. I think it really asks a very important question about how much stock actually needs to be given away to make these companies successful.
And what do you think, what would you advocate for going forward?
Well, one thing I've been told, and I'm not an expert on how they're running their comp committee, but I've been told, like Netflix, they've let executives make a decision between cash and stock. And a lot of them have taken cash. And I personally think management is a lot more thoughtful about cash expenditures, and I think they think about this SBC as if it's free almost, but I don't think shareholders think that way.
Yeah, certainly. So what about the valuation question? You've been warning that the tech bubble is a bubble for about a decade now, with this sort of question about what the future valuations are going to be in tech. The valuation of Instacart has come way down. What's your perspective?
Yeah, look, I've lived through 3 different bubbles and bursts in this industry, and unfortunately it's highly cyclical, and when you and it tends to go up slowly and it tends to crash immediately. And so this is the 3rd time I've seen valuations crash, and it's not something the company did. I'm not even defending Instacart in this case, just one of those companies that were on Deidre's list. Like, it just happened. There was massive multiple contraction writ large across the industry, and the companies have to navigate it. They can't magically wish for the valuation they once had because it's not actually related to how they're operating. It's just that the industry has been completely repriced.
So this is a healthy reset.
Oh, I think so, for sure. But it's very difficult because these private company capitalization charts have stacks and stacks of liquidation preference, and it's when you have that acute of a correction, it's very hard to make this transition. And that's one of the reasons why the IPO market's been slow to get going, because people have to come to terms with all these things. And I think you're going to see more of them kind of slowly move through. And it's very healthy that Instacart and their team have stepped up and want to take this step.
So what is your forecast for the IPO market? Most of the boards you sit on are of private companies. We have ARM, we have Instacart. How quickly will we see things pick up?
I think it'll be slow because this valuation disparity that they just talked about is a real issue, and it takes a while for people to come around. Like, they've been told, you're worth this, you're worth this, you're worth this, and all of a sudden they're worth 1/3 of that, and it just takes time for people to get in touch with that to decide what they're going to do. And as I mentioned, sometimes there's cap chart complexity that makes it actually very hard to move to the next step, to raise the next round, and all of that takes time. But we've had some time now, and it's happening, and the door's opening, so I think it's positive.